how to get approved for a hard money loan. It's really more simple and more easy than you probably expect. All right. I'm Marc Santos with Rapid Fund Lending. I fund projects for real estate investors across New England. And today I want to talk to you about just how easy it is to get approved for a hard money loan. So from a lender's perspective, there's really three things that we're looking at and assessing in order to determine whether or not we want to fund or can fund a loan request. So, and the acronym I use is just ESP. So the first one is just experience or expertise. So are you able to do this project? Do you have experience doing this type of a project in the past? And the more experience, obviously, the better. Now, just because you don't have experience doing this doesn't mean that you won't get approved. It just means that the terms may change of the loan. Lower loan to value, more down payment from you, those types of things. The next is skin in the game, and this might be the most important, probably is. All right, so by skin in the game, I mean money. Okay, so some people will say, well, I've poured a lot of time into this project, or I will pour a lot of time into this project, so that's my skin in the game. Well, experience tells me that people will walk away from their own time and emotion and energy in a project, but they won't walk away from money that they've put into a project. And so that's why we always ask for at least about a 20% down payment on the purchase price, and then we can fund up to 100% of the rehab costs, okay? So we'll fund 80% of the purchase, up to 80% of the purchase, and then 100% of the rehab, okay? Because we want to see that skin in the game right from the very front of the project, okay? And then last is just being prepared and organized. So that just means being able to articulate what your plan is when you make a loan submission or application. And so being able to answer some basic questions about the property without really any hesitation or uncertainty will really help you get approved for a loan, okay? So all those three, the ESP, the experience, the skin in the game, and the preparedness and organized is really leads to what I call the 4 C's of getting approved. And this is the really the core of what lenders will use to approve a loan or evaluate a loan request. And these are in a specific order. So the first one is collateral. So that's the property itself. So what's the after repair value? What's the loan to value on the property? What's your budget for construction? And what's the scope of work? So just the property itself and the numbers surrounding the project itself, okay? The second is your character. And so, do you do what you say you're going to do? Are you prepared? Are you organized? Are you responsive? Are you trustworthy? These all fall in line with that ESP that I just discussed in more general terms. Okay, third of those 4 C's is capacity. So do you have the experience and the expertise doing this type of project? If you don't have experience doing this specific type of project, do you have that sort of background, like a construction background or a project management background? Anything that can lend itself to giving us some confidence that you will finish this project and execute it properly, all right? And then last is credit, and that's by design. So we do pull a soft credit score on you so it doesn't impact your credit. However, it is an indication of your character, in my opinion, in the evaluation of your ability to do a loan. So we're going to look at your credit score. It doesn't mean if you have a low credit score, it doesn't mean that you won't get approved. It just means that you kind of need to make up for a poor credit with the other 3 C's, that collateral, that character, and that capacity, okay? On the other hand, good credit will help you get approved for a loan, no doubt, with maybe even when you're lacking in one or more of those other 3 C's, the collateral, the character, and the capacity, okay? So those 4 C's in combination really help us determine or help us evaluate whether or not we're going to do a loan and what the terms would be for that loan. Each of these projects tends to be very unique in nature, and so that's why we look at this through sort of a non-rigid underwriting process. And that's the beauty of dealing with a hard money lender is typically you're dealing with 1 or 2 people who make the decision. There's no loan committee, there's no strict bank financing regulations or standards. This is much more subjective in nature, and it's very personal. So you've got a lot more flexibility and leeway to get approved. Okay, now there are 8 questions that you're going to want to be prepared to answer anytime you're applying for a hard money loan. And if you can answer these questions satisfactorily with good answers and show that you're prepared and ready to answer them, that lends itself toward you being more likely to get approved. Okay, so the first one is this a purchase or a refinance? All right. If it's a purchase, great. If it's a refinance, we want to know why you're refinancing it. In other words, did you have a previous hard money loan? Why didn't you get the project done within the first 6 or 12 months of that original hard money loan? We just would like to see a good explanation for that to make sure that you are indeed meeting your obligations and can, in fact, have the capacity to finish the project properly. Okay. Number 2, obviously, we need the address so that we can look into the property. Number 3, what is the purchase price of the property? All right. Number 4, what is the construction or rehab costs and what's your general scope of work, just really broadly? We don't need the detail here, but big ticket items. I need a new roof, new siding. I'm going to put a new kitchen and a new bath in. My total project cost is going to be about $50,000. That's all we really need at this point. Okay. ARV, so after repair value. So what is your assessed after repair value based on the specific improvements you plan to make to that property, and justify it with recently sold comparables in that area with the same general quality finishes that you plan to provide for that project. Okay, pretty common sense stuff, but you're going to want to be very truthful about this up front, because guess what? I'm going to look into this anyway and determine whether or not your ARV is accurate or not. And guess what? If I think it's significantly different than you do, then that speaks to your credibility or competence on this project and leads me to think that I probably shouldn't approve this loan. Okay. How many similar projects have you done like this in the past? So do you have the experience on these types of projects? A 0 is not necessarily a bad thing. It just means you need to make up for it in other areas. Okay. And then how much liquidity do you have? Now, one of the conversations I typically have with a borrower is, I understand that you would like to borrow as much as possible on this project, and I respect that. However, I, as your lender, just want to know how much liquidity you do have. That means, how much money do you have for a down payment, plus what kind of reserves might you have available to get you through the project if you encounter unforeseen circumstances? Do you have a reserve to make payments if the project doesn't go as well as you thought it would, or goes longer than you thought it would? I like to know this, and then one of the things we'll ask for are just bank statements supporting that liquidity that you have. Okay, and then finally, number 8, and one of the most important of all, is your exit strategy. So what is your plan on the back end? If it's to sell it, then we just want to know that you've got a good plan to sell it and you understand the dynamics of what the buyer profile looks like. For example, if it's like a 3-family and you plan to sell it to a homeowner occupant, then does the 3-family meet the FHA self-sufficiency standards in order to get that loan to qualify or get you approved? So understanding those dynamics goes a long way. Now, if you're going to refinance it at the back end and plan to hold the property, then obviously you need to be refinanceable. So you need to have a high credit score, typically at least 650 or above. 700 or above is significantly better. Okay, and you have to have shown that you've done some research into knowing that you're going to be able to refinance it down the road. In other words, I've already spoken with my local credit union, and they've issued me a pre-approval for this particular project. Those types of things give me a great deal of confidence that you are actually prepared and have done your research to make sure that this project will go as you hope it should. Okay. So those are the 8 questions that you can answer to give your lender a lot of confidence, and being strong with those 8 questions, being strong with your skin in the game, with your experience, and then your preparedness will help you get approved. And then finally, remembering those 4 C's. So your collateral, your character, your capacity, and then your credit, all are factors that will help optimize your chances to get approved. So you can check out on my website. There is a free guide that I'm happy to send you you can just register for it and we'll send it to you immediately on the 7 steps to guaranteed hard money loan approval. And that goes into a much more detail into what we just discussed. And I hope this is helpful. Have a great day.